name is Lyndon Jr., and it is my pleasure to discuss with you the latest news in the stock market. Before we continue, I want you to know I'm not a financial advisor, and these videos are for educational purposes only. All right. I hope you guys all had a good week. I hope your families are doing well. All right. I told you guys I got to check on you guys every video before we jump into the stock talk. All right. Last video was a real good video, man. I'm getting all type of calls and emails. People like what's going on. All right. So guys, we're going to keep it going. All right. I don't want to delay it. Let's just get right into the stock news. All right. Wall Street ends down as Delta variant drives fear. All right, investors worried about a rise in coronavirus cases tied to the highly contagious Delta variant. All right, so I'm shooting this video Monday night, going into Tuesday. All right, so I'm giving you guys a recap from last Monday to Friday is how I usually do it, but since I'm kind of all over the place, we're going to squeeze in a little bit of Monday as well. All right, so we know what's going on. Corona's up, COVID's up, and the numbers don't look good. All right, so here we go, back again. Hopefully we can get a grasp on this, and we don't have to relive how it was early last year, March and April. But with all these spikes going on, let's focus on stocks for a second. The market is going to react. All right, so the market's been down, right? The numbers don't look good. Investors are probably reshuffling and putting their money into different things. Bonds went up this past today, Monday. Bonds went up. All right, that's usually a safe haven for investors or for these companies that buy all these stocks to put their money into safe places. All right, so that's how it's kind of been for the past week. It's been pretty red. You guys gotta keep fighting and don't let the red beat you. All right, that's why we buy good stuff in this club, because we know this is what the market could do. All right, we could go from green to red to green, but right now we're seeing a lot of red. It's a lot of red. So I know you guys who may have a lot of option plays are getting killed. I had about 2 plays with some options that some of you may know about options and some of you may be new to it, but options are contracts that you can buy, and you know whether you go up or down, it's magnified drastically. And with the red that we had this week and last week, I don't care how good you are. I don't care if you're the best to ever do it. Your option plays got to be getting killed unless you jumped on a Moderna play that I jumped on. I'll talk about that later on in the show. But all my other option plays getting beaten up. All right, but my Tesla play, my goodness. But I'm gonna keep strong. I'm not panic selling. I still got 2 weeks. If the earnings are good coming up, I should get back in the green and make some kind of profit. So this is where I'm at. The old me would have sold my option. All right, the big play I told you guys about that I'm in. But I know it's a lot of overreacting going on. I'm being hopeful that maybe by next week we could get back into a better state, and people will buy these stocks on the dip, and maybe with a good earnings, my Tesla pick could get back to $700, $680, $700. So I'll see how it goes. I'll keep you guys posted. All right. So back to the news. COVID's up. Stock markets not reacting too good to it. So a lot of things are going down, y'all. So we got to dig deep. We got to dig deep and stay consistent in investing in what we got going on. And that's why I tell you guys in this club, we buy good stuff that we don't have to panic at night. How do we sleep? We sleep like this. I mean, after these past 2 weeks, it might be like this with one eye, right? But at the end of the day, we know we're not losing 30, 40%, not in 1 week, all right? But, and this is why I stress to you guys, when you own individual companies, you're going to make a lot of money, right? Just on an average, you're going to make money. If you buy a good company, you're going to make a bigger return than buying the ETFs that we buy. But on the flip side, when the market doesn't do well, the ETFs, if they're good, they're not gonna they're not gonna drop as drastically as an individual company. So those are the pros and cons with the ETFs and individual companies. I love individual companies. I actually invested in Moderna this on Friday. I actually invested in Moderna. Did some research and I really kind of overlooked them and what they have left to do. And with the state that we're in, I felt like it was a good bet to jump on them. So I put a little money with Moderna, and it's been doing good. I'll talk about that later on. But back to the point of ETFs and individual companies. All right, when you guys buy these individual companies, I hope you guys are sticking with individual companies that are not, they actually make money, and people may not want to drop it at the instant that something happens bad in the market. Our ETFs, they're not going to make us, we have some that we pointed out in the other videos that should do good, right? Give us, in an average between 25 to 40%. And, in a five year run, we're looking for with certain ones that we have. And you guys should know which one that is. XOK. XOK, we're hoping, right, that it's a tech stock, a tech ETF. It's a tech ETF, right? 20% Microsoft, 20% Apple, with a bunch of other good tech players in there. We're hoping that gives us that big return. When I say big for us, between 30-40% within, a 5 year run. We have some more conservative stuff, such as our SPY, our SL, what is it? SLY, and the SPY, and QQQ. We got QQQ on the list too. All right, but we don't expect to get too crazy with XLY and SPY. QQQ we expect to kind of. I'm not really sure how high we could get with QQQ, but I know it's good, so I put it on our list. That should give us maybe between 20 and 30 in a 5 year run. All right, so stay with me, guys. So COVID definitely spiking. All right, stock market's kind of down. All right, so moving on. On Friday, public health officials said U.S. coronavirus cases were up 70% over the previous week, with deaths up to 26%. All right, so let me take this moment to tell you guys to stay safe out there. I know they said drop the mask. I'm still wearing my mask if I'm in a large crowd. I got to be out in the open with nobody around, and maybe you might see me without my mask. But we definitely gotta stay safe out there. Use your best judgment. All right, and let's try to get through this as best as we can. All right, so let me give you guys a did you know. All right, I'm trying to do a did you know segment in these videos. I think it's kind of cool. So I read something here. Did you know the S&P 500 posted 48 new 52-week highs and no new lows. All right, now that might have changed with the past week that we just had. All right, but prior to last week, the S&P 500 posted 48 new 52-week highs. All right, so every time you check your Robinhood or you check your whatever broker you guys are using, it's gonna tell you guys when SPY hits an all-week high or all-time high. Excuse me, an all-time high. And you sometimes might see that 2 times in a month, 3 times in a month. That's when you know your stock is doing well. All right, and it says here in the past, I believe it's in the past year. All right, S&P 500 posted 48 new highs with no lows. All right, not counting last week. The Nasdaq recorded 41 new highs and 91 new lows. So that shows you guys how Nasdaq flies. I mean, it flies, but you're also going to have those periods where they drop too. So you got to be along for that ride with these Nasdaq companies that do well so fast. All right. Now, another big thing that happened this week. All right, guys. U.S. retail sales top all estimates for June with 0.6 gain. All right. So my thoughts on that quickly is that it's good that the market is reflecting that people are going back and they're shopping, they're spending money. All right, it's good. Whatever's good for the economy is going to be good for our stocks. All right. One thing that I've noticed, and I want you guys to, keep this in back in your mind too. The economy and the stock market, they're entwined, they're married. All right. I mean, they whatever your feelings are about the economy based on news and what you see, that's probably what's reflecting with these stocks. So if the economy is doing great and everybody's doing good, majority of people are buying this, buying that, homes or whatever, refurnishing their homes, you just get that feeling that things are doing good and people are getting money. You better believe the stock market is going to be a lot of greens. But when you have that feeling that you're hearing jobs are not really, unemployment is high, negative things that you tend not to hear on a regular basis, and you got that feeling like it's just not, it doesn't feel good. Usually the stock market is going to reflect that. And right now we have this whole COVID thing going back up. A lot of states in the red and hospitals getting full. That's not good for the economy. So you're going to have that moment where the stocks are going to reflect that. I don't think it's long term, but I do think if things don't get better, and we have the right leadership to hopefully get us in that place, we can definitely see some big dips. All right, so this could go somewhere. I mean, I don't think it's gonna go far, but if look for that beginning of the month in August to really see how things are panning out, because I think that's a pivotal moment as far as the high we had and where we were going. If we don't get a grasp of this thing by the beginning of the next month, then it could get dicey. Could get dicey. So let's hope for the best. I mean, investing is one thing, but this is real life too. So I mean, real life stocks is one thing, but real life, nobody wants to be. We want almost like house arrest for a year and a half or a year. Nobody wants to go through that again. So I really hope, everybody does their part in trying to, get rid of this thing, keep it down so we could go back to somewhat of a normal life that we have. I hope you guys feel the same, because that's how I feel. All right, so continuing with the news, one of our favorite stocks, you guys know I love BlackRock, and I hope you guys love it too. All right, so BlackRock reported their earnings last week. All right, BlackRock reported a better than expected quarterly profit on Wednesday. BlackRock's assets under management jumped to a record 9.49 trillion. All right, that's up from the 7.32 trillion a year earlier that was reported. All right, there was one negative that I seen in the whole review of the company's earnings report. The one negative is that the amount of net inflows, which came in at about 81 billion, is down from the 172 billion the company reported the prior quarter. All right, so from 81 billion, that's what was reported this quarter. The previous quarter was 172 billion. All right, so investors are a little leery or worried about it. I understand why they were a little leery, because anytime you see a company lose some type of inflow of cash, you're going to say, well, maybe the business is doing bad. But as I further research for you guys, that's not the case. All right. It says BlackRock's growth is coming from the ETF business rather than the traditional long only asset management business. So, guys, businesses can change. I still believe in BlackRock. I'm still keeping my 50% with BlackRock. When I change my mind, you guys will be the first to know. All right. So with BlackRock, their businesses are kind of changing a little bit from the traditional long asset management investing to now this ETF business, which is growing so fast. ETFs, we spoke about that on video 2, I believe. All right, ETFs, you guys know, is a basket of stocks, and a lot of people and companies, these hedge fund companies, are putting into a lot of money into these ETFs, and it's growing. It grows every year. Actually, I have some more news for you guys. It says here that it took 15 years for iShares, which is what BlackRock, I believe, provides to people to invest in the ETF. It took 15 years for iShares to reach 1 trillion in assets. 5 years, and then in 5 years for iShares to reach $2 trillion. And then in 2 years, it passed $3 trillion. All right, so you can see the increase and how quick it's happening. Right, for it took 15 years for them to reach 1 trillion. Then it took 5 years for them to reach 2 trillion. Then it took them 2 years to reach 3 trillion. All right, so BlackRock iShares unit bought in $75 billion in quarter 2 and passed 3 trillion in assets in June. So even though the as I said before, the inflow of cash from the traditional investment was lower. These ETF business that they're in, the ETF business is doing great. All right. So as long as they're doing great in something and they're not losing money overall, revenue, once I hear revenue went up, I'm happy. All right. Earnings per share went up, I'm happy. All right. Let them figure out how to stay relevant and how to keep thriving. That's what they do. We keep investing consistently. Right, so let's keep it simple with BlackRock. Great company. All right, so I gave you guys that. I gave you guys this. All right, I don't want to miss nothing, you guys. I got that. Gave you guys this, that. All right, so Tesla news. All right, stay with me, guys. Tesla news. All right, Tesla launches subscription service for advanced driver assistance software. All right, this new option allows some customers to subscribe for full self-driving capability for $199 per month instead of paying $10,000 up front. So for all my Tesla investors long term, it is great to hear a company trying to accommodate uh, customers with different price, with different prices that they can pay to get these services. All right, so I like that. I like hearing that they're making a subscription that you can pay monthly for people who may want this package for this, driver assistance software. They have a lot of stuff that they're rolling out this month or that they're making known is going to roll out. I believe they have something now with gear sticks. So you know how you have those cars where you can go from automatic to manual by just clicking on something. I believe they're rolling that into their vehicles as well. So they're doing good, and I hope they have a great earnings because my option play depends on it. All right, so we took care of that. All right, guys. All right, so now I told you guys I don't say names, right? Not only am I born, not only I was born in Brooklyn, so we don't say names. You know what I'm saying? We keep everything. We don't do that. But I do like to take my real talks that I have with some of you guys on the streets, at the job, or the phone, wherever, and I like to bring it into the club so other people can learn from it, and I can make a section of the video that is learning, and it can apply to you, and it can apply to other people as well. All right, so I got a good question, right, that came up that I want to share with you guys. How would I invest $100,000 into the stock market today? All right, as I told you guys, I got all kind of friends. This club, you guys are gonna see people in this club. You stay with the club and keep tuning in, but you guys, we got a real club. We got some special people. Everybody's special in the club, but we got some special people in this club. All right. So let's get back to the question. How would I invest $100,000 in the stock market? All right. So I sat about it or thought about it over the weekend, and I came up with a little blueprint for the person and for you guys. You guys might, you might be ready to invest that. All right. So I would put 30% into BlackRock. All right. I would put 30% into BlackRock. All right. So that'll be 30,000 into BlackRock. I would put 30% into SPY. That's 30,000 into SPY. I'll put 20% into XLK. That's 20,000. And then I'll put 20% into QQQ, another 20,000. Now let me explain why I like that allocation of money. 30% goes to BlackRock. All right, we know what BlackRock does. They manage money. They're the best at doing it. They have a track record that goes beyond, any other management company that does great. So let's just think positive and say they're going to continue doing that for the long haul. You got 30% with them. And they also usually beat the S&P 500 in their yearly returns. So you got 30% of your money that's actually going to beat the S&P 500, which is a good thing. Now you're going to take 30%, put it into SPY. SPY, as we know, is the whole stock market, right? All the companies are in SPY. Okay, and we know SPY is very expensive, and it's the whole stock market. People who bet on future markets, they're betting on the SPY, right? So we know the SPY has value, just basic value in the stock market. So we want value. We want something that, like I said, when things go bad, it's not going to drop drastically. So we got 30% with the SPY, right? At 500 companies in one under one stock symbol, you can't beat that. You're covering all your ground. Anything that's good is in there. Then you got 20% with XLK. I told you guys 20% Microsoft, 20% Apple. You guys, all this should be like a common theme to you guys now, right? 20% Apple, 20% Microsoft. Other stuff is Visa, MasterCard, all the good stuff, NVIDIA. All right, so that's going to be I don't want to say it's not risky, but out of, this is serious money we're talking about. So when you're playing with serious money, you ain't just going to put your money in any old thing that you think sounds good. All right, so we're trying to protect our money, but we're trying to get growth. So we got 60% protected, and now we want to get the growth, right? So we're going to go 20% XOK. We're going to look for that 30 to 40%, right, with them. And then we got 20% with QQQ. We know the NASDAQ are high flyers, all right, that over time move very fast as a unit, right, with all the stocks in there. What I like about QQQ is they have 10%, I believe, with Apple, 10% with Microsoft, and then they have a lot of other companies that are very small in percentage, but they're all good, right? So I don't expect them to drop too drastically either, but I expect to get more growth with XLK and QQQ. You guys can go, I believe the website is Invesco, 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 to see the full holdings of any ETF, but that's where I checked QQQ, and you can see the holdings of the stocks that they have and what you're buying into. All right, so that's it right there, guys. 30% Blackrock, 30% SPY, 20% XOK, 20% QQQ. All right, that's how I would invest $100,000 into the stock market. You heard it from me. You heard it from your boy. All right, and this is the Retire Rich Club, $100,000 allocation question and answer. All right. Now, I also wanted to touch base with you guys on buying stocks that are franchises. All right, I kind of was thinking too with that type of investment. When you want to buy a franchise, there's the traditional way. And in my mind, I kid you guys not, a lot of things I think about, I'm not the first to think about it or make it known, but I pride myself on just thinking. I'm a thinker. I like to think, analyze stuff. I'm a Libra, but also that's what Libras do. We analyze a lot, all right? The scale is our sign, so we're always doing this. And some of the things I think about, I really read it later on. And I'm like, okay, that I'm on to something, the fact that I'm thinking these things and I'm reading about it. So I was thinking about, why would I really want to buy a physical franchise when I could just invest in the stock? If I know the stock has for example, McDonald's. If you want to open up a McDonald's, you got to go through so much this, that. You couldn't just buy the stock. I mean, you could, like, let's say I had 30 grand to open up a McDonald's. I don't even think that's the minimum to open up a McDonald's, but let's just say that's what I had, or 40,000, 50,000, right? I got to put in the time, open, close, this, that. I can just invest that same 50,000 into the company. It might be more risky, but it really isn't as risky. It might be a little more risky because you're investing into a company, but like I said, man, the track record speaks for itself. You could check McDonald's last 20-year run. All right. I just stick to what history says works. All right. There's just always in back in your mind a negative thing that can happen. But let's just focus on what has happened. And it says I would have made a lot of money in 20 years with this same concept by just investing into the company and not physically doing it. All right. So let me not lose my track of thought. So I was just saying that you can pick a good franchise. Make sure that they're making money every year. We guys know we have to make sure our companies make money, right? Once they're making money and management is good, you can look at, investing your money as you buying a franchise. To me, makes sense. Some, to each his own, as they say, but that's what I plan on doing one day. I take a large amount of money and pick a couple franchises and have that as my I'm an owner. That's my franchise money. And it's so easy to do. Some of the stuff that you can do in the stock market, you guys got to take advantage of it, because in the wrong country, they might find all kind of ways to like not allow you to do this stuff. I mean, you can just go tomorrow, put 40,000 into McDonald's. You could put, and you can still manage your stop loss if you want to, 30%, 20%. And it's like you could just sit back. Yep, I'm an owner of McDonald's, and just sit back and just, check your stuff, or just sit back and do whatever you do. I mean, that's one of the good things about this country. It's not, I mean, it really is. We're really spoiled in that sense. But yeah, you got Wingstop. So I thought about the franchises. I was talking to you guys like I'm really on the phone talking to somebody from the club. I gotta focus. All right, so let me give you guys real quick three companies that are franchises that I checked the 5 year return on. All right, so Domino's 5 year return is 253%. So let's say you took all the fear from your mind. You had some money to start up an investment. You want to get into a franchise. Let's say you put 25,000 into Domino's, or you put 50,000 into Domino's, because that was your investment money. You were ready. You were willing to invest like you were buying a franchise. You put it into Domino's, right? Your 50 grand, you would have been up 100,000 plus in 5 years. You guys can check it out. I mean, the stuff I just report to you what I find. Wingstop, 5 years, 493%. You would have seen Wingstop. We got Rick Ross talking about Wingstop. He's an owner. You could have bought the stock 5 years ago. You'd be up 500%. And now let's be honest. I wouldn't have put $50,000 on Wingstop 5 years ago. But even if you would have put 10,000 and treated it like you were buying a franchise, you would have been up almost 500%. So you would have been up, 50,000. All right, in 5 years. If you really treat it like you're buying a franchise, put the money down, don't look at it, walk away, and let everything work out how it's supposed to work out. That's what you would have did. McDonald's is not as high as those other two, but the 5 year return with McDonald's was 81% in 5 years, which is not that bad, because you're gonna feel more confident with investing into a McDonald's than a Wingstop. All right, McDonald's been around for forever, and they're still generating almost 20%. That's about 20% per year, which is not bad. All right, so I just wanted to sprinkle that thought for you guys. You can look into investing into stock like a franchise. That's just my thinking. That's something that I would do than actually doing a physical store. But I'm not trying to deter anybody from doing a physical thing as well. Just showing you guys how you can view your investments in the stock market in different ways. You can have different investments for different things. You can make it whatever you want, and that's one idea that I have. Wanted to share with you guys, show you guys some companies that are doing good as a franchise. And this show, I think, might be still not my shortest show. I'm at almost 30 minutes. Okay. I had a busy week, guys, just as you guys probably have a busy week. And I know good things are happening with the show, because every week it becomes more of a fight to get these videos done. But I'll tell you one thing, when I hit that play button and I do that whole "What's up, YouTube? Welcome to the Retire Rich Club" channel," it's like I brighten up, I have fun, and it's like it's worth the while. I love talking to you guys about the market. I love talking to you guys about the stocks and the news, my perspective. All right. Before I sign off and get into my goodbye, I want you guys to know I had a Moderna play that did pretty good. All right, among all my other stuff that's not doing good. All right, I told you guys I got a big Tesla play. Shout out to my Instagram. All right, at RetireRichClub on Instagram. I posted my I don't like to. Let me tell you guys something about me real quick before I sign off. I see some people doing different things on YouTube. They show you their account, how much money they got in there. Listen, I'm a very private person. I'm really private. All right. I don't really want people knowing all my business. It's just how I am. So I'm not gonna. I'm really not. Maybe one day I'll do it, but I got to be for a purpose, But You know what? I'm not gonna do it. I'm lying to you guys. I'm just too private. But I do want to show you guys some moving averages, and I did post a play that I just gave you the history of what I bought and sold. So you can see on Instagram that I bought them during the play. All right, I paid 200 and I believe $70 for the option call. Right, I bought a 320. I bought a call for $320. It cost me 270, and my profit. Right, I sold the next day actually, and sold it for like I think it was 670. Right, so that wasn't bad. The bad part was that the same contract went up to 2,000 today, Monday. All right, so if you're into options, which we're all going to learn about together as a club as we move on, all right, if you're already doing it, I know I got some family members who love option calls. I ain't going to call you guys out, all right, but make sure when you get your options, try to get two contracts, right? So you can, if one pops, you can sell that one for the profit, and you can keep the other one to let it run. All right. If I really wish I had the two contracts. I really felt like I didn't milk that play properly, but I took my 20% or whatever I had and I sold it because it was the right thing to do. But I knew back in my mind that it was gonna keep on running. All right. So just wanted to share that with you guys. I have a Tesla play that's doing horrible with this past week, but I do believe that by staying 10 toes down, I'm gonna report to you guys next Monday. I believe is Tesla's earnings. I think I'm gonna get to my mark. I really do. It don't look good, but I treat my option plays like investments. I leave it. If it goes bad, as my friend Franco says, shouts out to Franco, panic hold. All right, so I'm panic holding, put myself into it. I'm gonna just leave it alone and see if the market is in my favor. And I also bought some shares of Moderna because I like the company, and I think they really. I underestimated all the other stuff they have about to come out and what they're about to do. All right, so I'm with Moderna. All right, I do still have another play with them, but I'll share that with you guys later. All right, see how that goes. But yeah, man. So just wanted to share that with you guys. All right, I'm making that point too to tell you guys check the Instagram because I'm posting stuff that is making me money can make you money. All right, I told you guys we a club. I do not want to win by myself. I don't want to win by myself. I want to win with you guys as a whole, man. All right. So, another thing before I sign off too, I added the year-to-date returns for the ETFs that we buy every pay period or every month, right? So XOK is at 14% for the year. SPY is at 13% for the year. QQQ is at 13% for the year. And SLY is at 9% for the year. And Blackrock is at 17% for the year. All right, these are the year-to-date returns. All right, you got XOK, you got SPY, you got QQQ, and you got XLY. All right, the leading stock here is BOK with 17%, right? YTD year to date percent. All right, you got SPY, you got XOK. All right, this is what we buying every month, every pay period. You guys are down with the cause, and in closing, I'll also say, right, that we got to just be consistent as we get through this time in the market. All right, so every pay period, continue buying the stuff from the basket, you guys. ETFs to buy. You see it right here. Bow. Retire Rich Club ETFs. Can't lose with this. All right. Stay consistent, guys. Keep investing. Stay safe out there. All right. Wear your mask wherever you got to wear it. All right. Stay safe, you guys. That's video number 5, y'all. I think it's video number 5. All right. To hear our footsteps. All right. In closing, let me give you guys the three keys in the stock market. All right. Know what to buy, know when to buy, know when to sell. All right. If you guys are not in the game, I hope you get yourself in the game. All right. If you're in the game, I hope you're on your A game, and I'll see you there. All right. Let's sharpen our skills together. All right. So, guys, it's been my pleasure. All right. Till next time, next week, hopefully, stay safe, stay investing, Stay consistent. All right. We're long-term winners, long-term investors. All right. We're gonna get through the red times. We're gonna celebrate the green times. All right. Yo, I'm out, guys. Peace and love.